Okay, so I'm not really sure who are the new one to this particular session. This is basically a session where you guys can ask me anything that is related to trading wise, stock trading. If I can answer them, I will answer them. But of course, strictly no question on how I feel about certain stock or if I feel what stock can go up or what. So this is not like a stock request session, But aside from that, you can ask anything, lah. I'll try my best to answer. And you can either type or you can like unmute your mic and then ask, lah. Okay. Wait, so let me start the recording first. I'm just sharing this screen so that there's something for me to scribble on now. Okay, so you all can unmute yourself lah. Okay, so let's start. First question from Jack. What book would you recommend for someone to learn about trading? Okay, so in the on the internet out there, right? There's a lot of books that you can read. But personally for me, when I started trading, right, I don't really learn from book, but I learn from a lot of websites lah. Certain website here and there. But there are a few books that I can recommend. These are books that I myself personally read through and they are very very good books also lah. Number one, right? Number one is actually this book called Mastering the Market. It is by Tom Williams lah. You can actually try to find a PDF version for free. In the past, right, there's a lot of PDF version, but recently all these have been taken down, so I'm not sure whether if you can find it. So this Mastering the Market is quite good. Another book that I can recommend to you is Trading in the Shadow of Smart Money. Sorry, Trading in the Shadow of Smart Money. This one. So these are the two books that I can recommend. But what I will want to focus more on is that all these books, right? What they teach you is a lot of technical knowledge, a lot of strategy related stuff. But as a trader, right? Most trader, the key issue is not the knowledge but rather application of that knowledge lah, like trying to execute what you read on the book onto the stock market itself. So that execution part is where a lot of trader feels lah. There are many trader out there, like on social media, on forums, they know a lot of technical stuff, they know a lot of knowledge, but most of them, the issue is trying to convert that knowledge into a trade plan lah, in order to execute lah. So that's the part where a lot of trader feels. So sometimes if you read a lot of books, right, maybe you might have success with certain book, maybe some of the books you read already, you try to apply in the market, you will fail. But you have to understand that sometimes if you fail, right, doesn't mean that the book is wrong or the book is not good. It is just that maybe you are not applying the knowledge correctly lah. So that's the part that you should focus on more. But if you strictly want to talk about books, right, these two books are the one that I can recommend lah. Okay, next question.
Oh,
Yes, I can hear you. Who's that? Okay, wait, let me answer the next question first from WTQTM. Beside Nimbus trade setup that you actually put in money, do you actually invest in other stocks for long-term dividend purposes such as bond, REITs, gold, Bitcoin? Yes, to this question, right, my entire trading capital only consists of 30 to 40% of my total sort of disposable money that I spend on the stock market lah. So about 40%, only 40% of them is in my trading account. The other 60% is actually a long-term portfolio. So my long-term portfolio is extremely simple, very, 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 very simple, because I personally have a long-term goal that I set up already. If you have not read or see this Patreon post that I uploaded quite a while back, maybe 2 3 weeks back, about the roadmap to $1 million. You can go and take a look at it. And in that post, right, in that particular, it's actually a YouTube video lah. In that YouTube video, I do roughly explain a bit, but my long-term portfolio mainly consists of STI ETF. So what I do is I have this monthly saving plan by Philip Capital. I think they call it the SP, don't know what lah. Regular saving plan lah. So every month they will deduct like whatever money that you put in with them, and then that money will go into dollar cost averaging the STI ETF. So in the past I started off with every month 500, but gradually, right, I increased the amount. So currently, as of now, every month I am putting in about close to 1,500 lah, 1,000 to 1,500 that is deduct automatically via gyro, and that money will straight go into STI ETF. And the reason why I choose STI ETF is mainly because I want the dividend. If you look at a lot of ETF out there, right? Actually, for the STI ETF, we are quite heavily weighted to, the weightage is heavily towards REITs lah. And even the non-REITs, right, their dividend payout is actually quite high. If you look at DBS or whatever, right, they are still paying out about close to 4%, sometimes 5%, somewhere around there, if you manage to get in at a good price lah. But since I am dollar cost averaging, right, STI ETF, yearly the dividend is about 4 to 5%. And in that post, the roadmap to $1 million, I actually explain why I stick to that for 4 to 5% dividend every year lah. You can go and take a look at it. But aside from STI ETF, I also have a very small percentage of the S&P Vanguard lah. So I don't really want like everything to be weighted towards dividend, but a small portion of SPY Vanguard also allow me to sort of have the growth factor there lah. And aside from that, I have another small portion that I will sometimes buy specific stock, specific individual stock. Sometimes these stock, some of the counters that I still holding from like 5 6 years back until now, right? They include Vicom, Sheng Siong, UMS. I had it like way back when it was about 50 cent like that. Then it was like 4 5 years back lah. So I do have a small portion that is where I specifically buy. I aim at certain stocks lah, but you don't really need to go and worry about all the fundamental stuff, because when I bought all these stock, right, I don't really care about much about the fundamental. So I just follow what my broker told me to buy, and those stock, right, if I consider it as weightage of my total portfolio, right, they are only like maybe 2 3% like that, but generally about 40% is on STI ETF. And if once in a while, if I like to sort of play something riskier, right, I also go into unit trust, where I want to get myself into the emerging market or the China market, right? But there's too many stuff out there. I'm not really comfortable with trading individual stock in all these emerging market, right? Such as Indonesia, Thailand, right? So I buy a unit trust that is focusing on emerging markets lah. So I do have a small percentage also, but overall it is mainly STI ETF. I also have unit trust that is mainly focusing on bond, also a bit of fixed income lah, which sort of to make myself not really that exposed to the entire stock market lah. So it's good to have a bit of bond also. Gold and Bitcoin, no, I'm not really a fan of Bitcoin. I still find a bit of difficulty getting into crypto. So currently I'm not in crypto market yet. In the past, I do have a bit of gold, but due to the craze of crypto recently, right? Gold is like sort of losing its purpose in the market lah, where if smart money or trader, they are looking to sort of hedge against the overall risks, right? They tend to go into crypto lah. Yeah, so I hope that answer your question. Next question. For cheaper second entry, while the stock price dip but have not yet hit stop loss, how to manage the risk? Is the risk doubled now since first entry is still open? E.g., 10 cent, is it more attractive to do second entry? So from Kathleen. So okay, now the issue is second entry, right? There are two ways to go about it, but the way that I use, right? What you say is correct. If you enter the first entry, you go in with 1% risk. Then if you enter the second entry at the lower price, you go in with another 1% risk. So when that happen, right, you are now risking 2% lah, instead of the usual 1%. And if suppose, let's say that particular counter sway hit the stop loss, right, you are down by 2% instead of your usual 1%. So personally, how I would manage second entry, right? Number one, you don't really need to take the second entry. So second, so you need to understand the purpose of the second entry there. By taking that lower entry, right, what happened is what you are trying to do is you are trying to lower down your average buy price. So if let's say your original entry you buy at $10, and let's say when the price dip all the way down to like $5, you buy again, right? Then your average buy price is probably somewhere around $7 like that lah. For example lah. So by lowering down your average price, right? Let's say if the stock price eventually hit the TP, right? Now you will be a lot more in profit, and not only that, your so-called your volume now is much higher lah, almost probably more than 2 times higher than what you will have if you are just taking the first entry. So the purpose of the second entry there is more from the profit perspective, is more from the greed perspective rather than the risk portion part. So how you can manage it is there are two ways. Number one, right? Number one, when you are entering the first entry, right, you should already make up your mind whether you want the second entry or not. So let's say for this 10 cent, right, the moment I enter 10 cent, right, I need to make up my mind whether if I will enter second entry or not. So the thing is, when you enter the first entry, right, because price haven't dropped yet, so you can't really tell whether price will go down to your second entry or not. But when I make that first entry, I will only go in at 0.5% risk, half the risk that I would normally take. So if you are usually taking 2% risk for all your counters, right, then you will take 1% risk for the first entry. When it hit the second entry, then you take the other 1% lah. So when those both entry add up together, right, then you are still taking that usual risk that you usually take lah. But the issue with this is, suppose you only take half the risk with your first entry, you take that 1% risk or 0.5% risk, whichever lah, and price doesn't go down, price go all the way up and hit your TP, right? Then if that's the case, because you only took half your position, right, you end up only making half the profit lah. So you need to weigh these two together. So the more, I would say, conservative way to go about it is that you take half position. That's the better way to more safer way to go about it. You take half a position on your first entry, and then let's say if price go all the way down, you get your second entry also. But if price go and hit your TP without hitting that lower end price, right, what you actually have is you still have profit mark. It is just that the profit is slightly lesser law. So that's how I will go about it lah. And another way is that instead of going in at the first entry, right, you can put that counter into your watch list and see whether if that counter go down to your go down to the lower entry or not. If it does go down to the lower entry, right, then you will put in all your position at the lower entry there, and you will get a lot more profit compared to, let's say, you half lah. So that's another way to go about. But once again, the issue with that method is, let's say if price go all the way up and hit your TP, right, then you don't even get the profit of half an entry lah. So every choice here has a pros and cons, so you need to choose which one you want lah. If you want a little bit of both, right, I do suggest take half entry and take another half entry. But personally for me, right, I do very rarely take half entry. I will either go everything at the entry one, or I will double my risk by taking two entry, one at the one full entry at first, one full entry at the second. So end up I'll be risking two times the amount that I would usually risk lah. But of course, if you are risking like 1%, right, then if you have two entry, you are risking 2%. So it is still okay lah. It is still okay. But the thing is, you should not do this very often lah, because if you do that too often, right, you might as well take every trade at 2% really lah. So there are certain criteria. So for example, number one, I show you a live example with US Steel lah, because US Steel is one particular trade that I actually took a double entry, and my risk was a lot higher, not a lot higher lah, two times higher. And then as the US Steel eventually hit the TP, right, I was able to get quite a lot of profit lah, a lot more than usual lah. So if I show you my investing note lah. Okay, at the same time, X. So under close position, right, if I want to talk about the highest profit, right, US Steel is actually at the top there. So what happened with US Steel is that shit, I can't remember. Okay. So the first entry was here. Okay, the first entry was here. Then after that, price went all the way down, and the second entry was somewhere here. So why did I take the second entry with double risk? Mainly because at the bottom there, right, you do not you will notice that the support is established. Not only that, there is a big volume coming up here at the support here, this one, and after that it rarely backs up with a very good volume also and a very bullish candle. Hence at this candle I took the second entry, and of course US still continue to go up and hit the TP lah. So if when you are taking the second entry, right, what you do not want to do is you go and take the entry when the price is coming down. No, you don't do that. You don't take the lower entry when price is coming down, meaning one big red candle go to your lower part, you do not take the entry. How you should take it is when the price go down, right, let it go down. But let's say when price start to come back up, you take the entry as it is U-turning back up. Because if it doesn't U-turn back up, go all the way down and hit your stop loss, right, then you only kena that first trade lah. You won't kena your stop loss for the second trade. So that's how I usually manage lah. Okay, so I hope that answer your question for Kathleen. Okay, next. If you all don't ask, I will just sit here leh. what do I do for living? Okay, so in the past I worked as a chemist. So I actually work for a pharmaceutical company lah. Actually is the second biggest pharmaceutical company in the world. The of course the biggest one is, of course, in terms of revenue wise, right, is Johnson and Johnson lah. Is the biggest one. Right after Johnson and Johnson is Roche lah. So I actually work for Roche as a chemist. And what Roche does is that they produce cancer treatment drugs for breast cancer and a lot of other cancer lah. So with this COVID-19 recently, right? Roche also got into all this COVID-19 test kit and all these other drugs and medicine that sort of try to alleviate the symptoms of the COVID-19, and my background is mainly biotech and chemist lah, but not Mr. White lah. So that's actually my background lah. So I'm not sure if that what you're asking for, but yeah, that's what I did for a living. But currently, right now, I'm giving course. I'm focusing on creating my new website for Nimbus Capital in order to have a this thing that I'm trying to create is an online portfolio tracker together with a trade management guidance where it will sort of alert the trader whenever the stop loss is reached or all these kind of stuff like and within this website, right, within this portfolio, right, I'm also trying to embed a lot of the Nimbus trading strategy also. So as long as you are using that portfolio, right, the Nimbus strategy will be in place. It will teach you where to TP, it will teach you how many lots to TP, it will teach you how to auto tell you what's the lot sizing you should play, all this kind of stuff lah. So currently my full-time job is I'm working to create that particular website with a web developer. Currently it is already in progress lah. So the target date to release this is sometime around September, October, like that. Next question. Okay, yes, because currently this Patreon, right? I'm not sure if you all know, Patreon is a platform that is set up by US. It's a US company lah. They set up this platform. So what this platform does is that it allow um influencer, if you want to call them, or it also allow other kind of artists to sort of post their work, post their whatever they want to post, and then they allow these people to charge their audience a monthly subscription fee lah, which is what you all are being charged now as part of the Patreon lah. So Patreon actually provide this platform where they do all the charging for you. They handle all the tax. They handle all the bank transfer, everything lah. So Patreon actually does that. But the thing with Patreon is that if you all notice, right, they charge you tax. Not only they charge you tax, right, they only deal in USD. I can change to SGD, but the conversion rate is really horrible, extremely horrible, and it's not worth it. So what? And not only that, Patreon also takes um 15 or 20% of the income that you all give, and they take it as their so-called they take it for themselves lah, for the service of providing this particular platform lah. So although you are being charged like $20 USD, right, I only in the end on my end I will receive about 12 to $13 like that lah. So majority of them they are taking. So what I'm actually going to do with this particular platform, my own platform, is that I will be able to support something like Patreon like that, but I will no longer be using Patreon, so it will be moved to my own website. And because of that, right, I no longer have to deal with the horrendous conversion rate, and also I don't need to give Patreon like $20, like 20% of my earning lah. So with that said, right, by porting over to my own platform, right, I can actually lower the subscription fee lah. Let's say now you're paying 20 USD, right? I can actually change to 20 SGD with the new platform lah, because I no longer need to give all this money to Patreon already lah. And not only that, with if you all notice, Patreon billing structure is very very funny also. Like I will get a lot of message every day with people asking like how come they are charged twice lah, this and that lah. So it's a quite a common issue lah. So by moving to my own platform, it will have a much clearer billing structure, and everything will be sort of under my control lah. I'm not at the mercy of whatever Patreon policy is lah. How to set TP? I'm so sorry. How to set TP is strictly for those who come to the course lah. So I can't teach you how to set TP. Will you explore into option in the future? Actually, I do have a lot of plan for the future, and the future mainly consists more on crypto. I'm currently trying to learn crypto. I am actually in collaboration with another sort of writer, someone who posts quite a bit of crypto related stuff. Also, he actually take this exam about blockchain technology, and then he's also quite a experienced trader. I know him way back, like when I first started trading. Actually, we both know each other when we first start out, and after 8 years, right, after 8 9 years of trading, right, I only have a few friends, maybe less than 10 friends that is still surviving until now, and he is one of them lah. I'm more of leaning towards crypto rather than option, but I guess if there are enough audience, right, I might consider option also. But of course, the key thing is that I can only teach what I am proficient at lah. So I don't want a scenario where I go learn option for like 2 3 months and then I suddenly become like the option expert like that. I'm not trying to be that kind of person. Generally I don't teach things that I'm not familiar with lah. Okay, so from Kathleen, can you differentiate the term aggressive, risking, high risk, high reward trade setup? I really like low risk, high reward. Yes, I think everyone like low risk, high reward, and low risk, high reward trade generally, of course, doesn't come very often lah. So in if you notice all the trade setup, right? I actually does include explanation on why is it considered aggressive or what. So for example, you see here, right? Aggressive is aggressive because I put a very tight SL, tight stop loss. That's why it is considered very aggressive, like in a sense. It is much easier for this trade to hit the SL because the SL is much tighter. But I am hoping on the fact that it will not retrace at all. It will aggressively move upward lah. That's why it is considered aggressive. So aggressive trade setup is somewhere where, for example, let's say US steel so wait, maybe US steel is not a good example to show this. Wait okay, let me show you with prop next. Let's say if I were to trade this, right, if I were to trade this candle, generally I will put my stop loss here, a lot safer if I were to buy this chart lah. But if I put my stop loss somewhere there or even here, right, then this is a normal trade setup. But let's say if I want to get very aggressive, right, I can put my stop loss right here. Instead of here, right, I put my setup right here. So this is a very aggressive stop loss because if it retraces a bit, you are out already. But let's say if my stop loss is like somewhere more below here, right? If it retrace and continue to consolidate, I am still in the trade lah. But if I put my stop loss here, then chances are that any kind of retrace cannot happen lah. Or if a retrace happen, it is probably just a sideways movement lah. So that is what I mean by aggressive. The stop loss is very very tight. Risky is usually for counters that are downtrend. For example, prop next definitely not risky because it's a downtrend. But if you look at counters such as Samcorp Marine or some other downtrend stuff, right, I will consider them as risky. Sorry. SIA was termed risky because it was a downtrend. High risk, high reward is a combination of aggressive and risky. It is a downtrend counter, but the stop loss is also very tight. So it is high risk, But if that counter managed to shoot up, right, then it is high reward also because you have a very tight SL. And if you have a very tight SL, right, you are able to play a lot more lots. You are able to buy a lot more volume. Hence, your return will be a lot higher. Okay. So low risk, high reward is you have an uptrend. You have an uptrend counter and it is extremely tight stop loss, but the potential profit is very high also. So that is a low risk, high reward. So for example, maybe prop next can be a very good low risk, high reward where I can put like the SL is not tight in a way, not tight, but wait, let me give you an example. It's very hard to explain without an example. So some power, I think it was one of the, I'm not sure if I consider it, if I sort of label it as low risk, high reward. So firstly, some power is an uptrend, very strong uptrend. But when it retraced, right, I think the trade setup came around here. The trade setup for some power came around here. This candle, here. So because it is right at the support, but it is still in an uptrend, right? So what I can do is I can actually place a extremely tight SL right here, and then my target is like somewhere here. So now what I have is I have a uptrend counter that is stop loss very narrow, but the profit white is much higher lah. So I will consider this as a low risk, high reward trade lah. But there are very few low risk, high reward trade out there because normally it's quite hard to place a very tight SL. Sometimes it's if the stop loss is very wide, right? I will have another terms called wide SL where the XL is extremely wide, meaning there's a chance that you might get stuck in that counter. So that is something you have to be wary of. But recently, right, since most of the counter we are hitting a lot of TP, things seems to be quite bullish, right? I tend to get a bit more aggressive so you can see a lot of so-called aggressive posts and the white stop loss posts start to sort of fade away. But when market start to go sideways, right, then I will generally widen my stop loss a bit so that they can account for any kind of consolidation, and you will start to see all these white stop loss posts coming up again. Next question. No, I don't mean it as a joke. So recently, when I try to post Patreon stuff, right? There's a warning that came out that says there are a few people flagging Patreon link as fake news. So there will be a warning that flag out say it is considered fake news, and whether if I still want to post it or not. So if I keep posting something that have been flagged as fake news, right, then in the future all these posts will get sort of tagged with this is fake news. Do you still want to read this or not, or something like that lah. So generally, I think this happened when a few, I don't know who lah, but when people start to report these posts to Facebook and consider it as fake news lah. But I mean, I'm not really too concerned about it. It's just that I was quite surprised. Hey, how come some, how come Patreon can be fake news also? I mean, it's not even news in the first place lah. Unless that person mean I'm posting or I'm claiming things that are not true lah. Which is in a way a bit funny also because a lot of the Patreon posts are actually trade setup posts with very clear stop loss and TP level. So it's either whoever flagging out is not subscribed, they are not able to see all the posts, or I'm not sure lah. I'm totally lost really. Frequently yeah, so the thing is frequently TP and frequently hit stop loss, right, is quite funny also, mainly because if I doesn't the stop loss is very open ma, it's very my stop loss is very transparent. So if it doesn't hit, then never hit law. So like anyone can actually go into here, or anyone with access to Patreon lah can actually go and look at all my trade and actually do a double check on whether things really hit stop loss or not lah. So so I'm not quite sure. So like it's funny also. Yes, I think it is because it cannot be opened by non-subscriber lah. So I'm guessing that's the issue lah. But you know the thing is that all the counter that are hitting TP recently, right? They are entered in March. They are entered during the month of March, and during the month of March, everything was public. So all those counters that are hitting TP when I share the Patreon post, right? I mean there are a few counter that we entered during April, then it immediately hit TP. We do have a few counter, but majority of them will enter in March. So if you look at here, right? Uh, if you look at all the March, right, we have all these counter that was during March that are suddenly hitting TP lah. Uh, Only very recently, like Fortress Mineral, Southern Alliance, Innotech, Semcon Industry, that were sort of posted in April lah. But I think way beyond that, during March, right, all these Stemcorp Marine, Star Surgical, Hanwell, Razor, Southern Alliance, Sun Power, all these were made public. Can you make your new I can make it come out earlier if you can give me like 30K lah. Because okay, that's just a joke. Please don't give me any money. But the thing is is the common saying lah. You can't expect a woman to give birth in less than 9 months no matter how much resources you have. When a lady get pregnant and want to give birth, right, the minimum needs minimum need that 9 months lah. Because there's a lot of a something like AI that is input into this platform. Like depending on how you enter and where the price is, it will ask you should exit already. Or let's say if the platform realize that you are taking too much risk, your overall risk is higher, it will ask you to stop entering new position, keep to what you have. There's a lot of AI running in the background and because of that, right, it does need to sort of do very I do need a very thorough check before I actually release it lah. But the platform will actually be ready end July, and once it's ready at end July, right, I'm looking to people who are on Patreon, such as yourself, who are free to help me sort of test this out. You can consider it like a beta test lah, where we will have I will provide this platform to the Patreon folks for free. You all can go and test out to see if things are working correctly, if there is anything buggy or what. But of course, you don't go and use that beta version to go and make money lah. If something error happen and you lose money, that one I can't help you lah. But once a proper testing has been done, maybe in 2-3 months, sometime around October, then I will release it to the public and I will start charging lor. But before that, I have plans to sort of reach out to Patreon subscriber to see if they are willing to help me play test it out lor. So for those curious for, right, the platform actually costs about, I think, uh 40k to develop. 40k is actually the base lah, and there's a lot more things that is going to slowly add on in the coming years, which will be another 10k 20k. So I think if I want to look at the whole package of the entire platform, right, is I'm looking at about 100k lah, that I'm putting the money onto this platform. Hence there will, once the platform is released, right, there will be additional charges in order to use that platform on top of the Patreon $20 lah. So that is something that cannot be avoided. From iPhone, do you consider dividend as a bonus or will you count that into TP? Okay, dividend are very tricky business when it come to trading. I personally will not count that into TP unless right that dividend is extremely big. Because if suddenly if you have an open trade and a dividend, a very big dividend start to come in, right? You do need to adjust your stop loss and ensure that you are not stop out by that dividend drop lah. Because after all, you are getting that money from the dividend anyway, right? So you sort of need to adjust your stop loss also in order to make up for that XD drop lah. So one example I can give you right is Jaffa. So if you look at Jaffa, right, there was a 10-cent dividend here. Okay, let's say if I have an entry here, if I have an entry there, and my stop loss is here, right? I can get stop out by the XD drop. So if I know that there's a dividend, such a big dividend coming in, right? I need to actually adjust my stop loss lower lah. In this case, right, adjusting the stop loss lower doesn't mean you are increasing your risk because you are getting this much money as a part of the dividend already lah. So you are just adjusting the same amount that you are getting here lah. So these are some special scenario that you need to be mindful of when there is dividend and you are holding a particular counter. But let's say if the dividend is very small, right? Like maybe like 0.5 cent, those kind, right? I don't really care lah. Wait, I saw another question. Wait, what's that question? Was there a period where you do not trade because scanner shows no counter? That there was a period, but I think that period was not. I have not made my scanner public yet. It was sometime during last year, 2020, sometime around end January, right? There was a period where my scanner doesn't show anything, and even if it does show, right, the counter like very quite jialat lah. It's like I look at the chart already like don't want to trade. So I actually stay away from trading. Then after that, when I realized, hey, how come every day my scanner nothing coming out? I got a bit fishy. So what I did was I do have a short scanner, but I don't really post my short scanner because I don't want people to go and anyhow shorting is a very uh tricky and risky business when it comes to stock trading now. There's a reason why I don't show my short. But after I realized that there's like for 4 5 days my scanner no counters, right? I actually turn on my short counter and end up SIA and Keppel came up, and I look at SIA and Keppel chart, was like, oh, this one look like going to fall very big like that. Then I took the SIA shot and the Keppel shot there lah. So what you can the way you can make use of the scanner is also you can look for, you can sort of see how many counter does it turns up lah. If you use, for example, if Singapore counter, right, most of the time it will give you like 5 counter, 6 counter. Sometimes on a very good day, right, it can give you up to like 10 counters like that. But there will be a very dry period where maybe only 1 counter shows up, 2 counter shows up, right? If those if you start seeing those, right, it is a good time maybe not don't try to force a trade lah. So it is during those period where you will see me stop posting any trade setup. And when I stop posting trade setup, right, it's not because I am slacking or I'm not doing my work. I'm just taking your money for free. No, but it's because there's nothing to trade lah. So better don't trade. So I think it was during this year February, also during that Chinese New Year, I drastically reduced my trade setup because there isn't much stuff coming out lah. And I focus more on towards the US side, mainly because Hong Kong and Singapore counters are not very good during that period from the way I'm looking at it. Then we sort of shift our focus toward US side. I think it was during the Chinese New Year period. So you can actually see, yeah, you can see here that towards the end of January to February, right? There are we focus a lot on US counter during this period lah. Then after that, when the Chinese New Year is over, when things start to bullish again, we start to move towards SG counter and a bit of Hong Kong counter also lah. Hong Kong recently is not doing very good also, hence you see very little Hong Kong, but once they start to recover, right, you will see much more Hong Kong stuff coming back also. Okay, we are at 10:26 now. I can handle two more questions. No one? 10:27 now. One more question now. No more, two more question. Last question, last question. No amount of time, either TP or SL. That's like the strictest law that I follow. So it will be there until it either hit. No, once the trade is there, right? TP or SL. If not, I doesn't exist. So you can see that if you look back, right, I have you can see here. Actually, I have Unway Express. I might have accidentally unchecked it lah. So you can see Unway Express back in Jan. I have it. I have First Resources. I also have it. 九天 Chemical. I have it. Still in Jan. Johnson Electric H. I still have it. PayPal. I have it in February. Swire Pacific A. I still have it. And look at my open position. These are my open position. Johnson Electric still there, Netflix still there, First Resources still there, 九天 Chemical still there, Anhui Express still there, Swire Pacific still there. So there's no I will say there's no compromise on that lah. I will hold those counters because the thing is you never know when they are going to run. And if you start to exit them, if you start to exit prematurely, right, it will become a habit. So maybe now after 2 months you exit, then maybe next time your heart itchy after 1 month you exit, then next time your heart itchy 1 week doesn't go up, you exit ready. So what happened is now you are depending on things that you have no control over. You are depending on your feelings instead of depending on a particular trading rule, right? You are now depending on your feeling. So when if you depend on your feeling, right, you can fall down a very slippery slope, where you start to change everything here and there, and end up you miss a lot of trades one of the example I can give you, I think this example I give a lot. Food Empire. The first trade setup was here, stuck for 4 months, then after that run all the way. Another example, ISDN. There was a trade setup somewhere around here, then stuck for like about 4 months, then after that run all the way. You never know when things is going to run. So never ever prematurely exit when TP or stop loss is not hit. If you want to enter, you can definitely enter lor, but the question now is, do you want to enter or not? Since there is a lot of other more profitable, there will always be trade setup coming in. Why would you want to enter a counter that has been open like very long time ago? There will always be new trade setup coming in lah. So if you have the choice between a trade setup that just came in, or you want to go all the way back and enter something that we have been stuck there very long, that is up to you lah. But I don't recommend going back to enter counter that is stuck lah, because the thing is, you cannot tell the future. It might be stuck for very long and then end up hit stop loss, or it might stuck for very long and it can go up like 50-60%. There is no way for you to know. But what you should do on your part is to have a proper system that you follow. So if you choose to enter, right, then you stick to the your trade plan already. If you don't stick to your trade plan and you go and prematurely exit, right, then what is stopping you from prematurely exiting every other trade that you take in the future? So end up, what you have is you no longer have a trading plan. You are just blindly prematurely doing things based on your feeling. And the thing is, we do not want any feeling getting in the way. So the moment you open the trade, right, stick to the trade plan. Okay, so we have come to the end of today's session. So, yeah, thanks everyone for coming. So, this Ask Me Anything session, I tend to do it randomly lah, but most of the time about once a month. So after I do it, I will definitely is recorded lah. I will post it up, and you all can look back at it again lah. Okay, thanks everyone. Have a good night and have a good weekend. Bye bye.